Hey, Walter here, and I want to talk about one thing that's really interesting. You know how you can tell right when you meet someone for the first time, you can often tell, like, yeah, I'm going to like this person, or, this person isn't really my type of person. I'm probably not going to spend a lot of time with this person. And you can do it almost immediately, which is, by the way, one of the reasons why speed dating is so popular. Other than the fact that we spend most of our lives in cubicles, a lot of times, if you're working a job or whatever, we get a lot of, we're time poor. So speed dating is kind of like a quick way to figure out, should I date this person? And you can usually figure it out in a couple of minutes, which is fascinating. There's a book called Blink by Malcolm Gladwell. If you want more information on that sort of gut reaction, that sort of instinct that we have in decision making, there's a fascinating story about the guy who authenticates art in that book. Anyway, and lots of other ones like the car salesman and all kinds of cool stories. But so let me talk about, and by the way, if you want to learn more about growing an account quickly, you go to bigprofitscourse.com and we'll share with you the methods that I use to grow a small account quickly. It's aggressive trading. And one of the reasons why I find that there are several different things you need to look at when you get really aggressive with your trading is because it's not just about the system. The system doesn't really matter nearly as much as the way that you manage risk and the psychological tools and tactics that you use. And we spend a lot of time in the Small Account Big Profits course talking about this. So you can learn about it by going to bigprofitscourse.com or clicking the link below this video. But so here's one thing that I do. So there's a risk algorithm. There's several that I introduce in the course, but there's one that I use and that I really like that enables me to get a really high reward risk ratio over a sequence of trades. But it comes with a slightly deeper drawdown than you would normally get if you were just risking normal fixed fractional, which is, of course, 2% per trade, 1% per trade, or whatever. So what I do is I use these mind tricks where I don't actually, so what I do is when I'm looking at my trades, I don't think of a finished trade where it's cashed out and all the positions have been closed out. I don't think of that trade as done because I know that I have to have more trades that are going to add to the risk of that segment in my platform in a sequence of trades. So I have to look at my trades as chunks of trades rather than individual trades, and that's the mind hack I've used. And the reason why I do that is because if I just looked at my trading system and I looked at my trades as individual trades, it would get quite depressing because of the aggressive risk management strategy. Because you could look at this and go, oh my gosh, I took these losses and there's a bit of a dip here in the equity curve and all that. And the system is set up so that what happens is you're almost always in a drawdown, and then occasionally you just climb out of it like rapidly, like super fast. And that's pretty much the way that most traders end up trading. If you're going to trade really high reward risk ratio trading, you end up trading low win rate but super high reward risk ratio, which for me is the way to go. The difficult part of this is shifting your mindset really and learning how to go, you know what, I'm not going to try and just take these little, trades from this end of the channel to the other or whatever, or from this end of support resistance to this one. And so once you start looking at it from a different point of view, you start thinking about, I want to take bites of this move right here. I want to learn how to make profit here instead of learning how to make profit from here to here. That's really the mindset. And the biggest thing is learning how to lose. We talk about this in the last week of the course. So if you do join us, you'll see that. And it really comes down to how you reframe things in your mind. The reason why traders quit is not because their system's broken, not because their broker's out to get them, not because any of that stuff that we kind of trick ourselves into thinking. The reason why traders quit is because they are unable to deal with losing streaks. It really comes down to that. And so all the other stuff is just kind of fluff. So a lot of what we talk about in the Small Accounts Big Profits course, where I'm taking the $1,000 account and ramping it up to 100K over 300 trades, it all comes down to psychology. Obviously, risk management is important, and you got to have a profitable system, but psychology is a big piece of it. And if you talk to any traders who've been around for a while, they'll pretty much, don't take my word for it, they'll pretty much say the same thing. So I hope this helps. I wish you happy trading, and we'll see you in another video. Okay, take care. Bye.